Hello and welcome to a new episode of Under 360 English. Today we are going to discuss about when should you exit from a stock that you have already bought. We know that everyone are researching for stock ideas, in which stock I have to invest, in which mutual fund I have to invest, and what about the growth prospects. All those things you will rigorously do research and you will invest in a stock. But after investing, and if the stock price goes up, the next confusion is with many of the people is whether now I have to exit it or I should hold on with it. Because many occasions are there, once we exit from the stock, that may again move up. Then everyone start to have a regret feeling. Because of this regret feeling, especially when you have experienced that a couple of times, even when the stocks start to peak out also, we have a tendency to hold it. But unfortunately, after that peak, it start to roll down. Then again, regrets start to mount up. So, it's very important when you should sell a stock, when you have to hold that stock, how long. So, all those things we are going to discuss in this episode. So, stay tuned, keep watching. In this episode, we are going to discuss about a few parameters, a few indicators that you can consider while you think of selling a stock from your portfolio. And the first thing you have to consider is about that particular stock's fundamentals. If the fundamental of the stock that you are holding is start to degrade, deteriorates, if that's coming down. For example, if the profit margins used to be coming down or the guidance looks not that much attractive, in that case, you never feel hesitant to exit from that stock as the part of risk management. Moreover, you feel that the competition is mounting up. More and more companies are coming into, or even the competitor companies investing more money on research as well as for marketing. In that case, nothing wrong in exiting from that stock. Ultimately, we all are entered into the stock market to generate money. We need not loyal to any company. Only the promoters need to be loyal to their company, not the investors. The second thing you have to consider while you exit the stock is if you find a better stock than the stock now you are holding, then obviously you can exit it, because as per your assumption, as per your estimate, the particular company that you are now holding may give you 20 to 25% an annual yield. And on the similar sector, if you could be able to find another stock and you, as per your research as well as the perception, you have an estimate that may give 40% of annual returns, then why should you have a doubt? Switch it to the other one which is better. In this way also, in this situation also, you can exit. And the third parameter is about if the company is overvalued at that particular point of time. Never hesitate to exit from that stock. The shortcut method to evaluate the overvalued or undervalued, all those things, usually we used to depend on the price earnings, P ratios. Current price of the company divided by earnings per share. So if you feel that the P has been shot up, in that case, nothing wrong in exiting that particular share. And if you feel that fundamentally that particular company is very good, later when that go for a correction, you can re-enter it. Along with the PE, you can consider various RSI also you can depend on to find whether the stock has been overall overvalued or not. The fourth thing you have to consider is about your personal liquidity concerns. Why I am telling is ultimately when everyone comes to the stock market, the ultimate aim is to create money. For what we are generating money? We are making money for our personal as well as societal expenditures. For example, some unforeseen expenditure or even planned expenditure also comes to you. Which one you need to liquidate, or from which investment option you need to exit? The first option should be the investment which is very much volatile in nature. That should be cut off first, because we are not sure about tomorrow where the market will go off. So when you need some money for your personal needs or professional needs or whatever it is, anyway, in general, when you need money, the first thing you have to consider to exit, that should be from the stocks. Then which all stocks? The stocks which are very volatile, that should cut first. For example, if you are holding a penny stock with 10 rupee you have entered and now it's 15 rupee. And the second stock that you are holding is Reliance Industries. So in that case, when you try to exit for a personal purpose, you should exit from the penny stock, because after a couple of weeks, we are not sure about the direction of that penny stock. But on the other hand, at least Reliance Industries give you some confidence. And the final word is nothing but the simplest thing you to consider whether it's the time to exit from a stock or not is you ask yourself, if you are an investor, if you have not invested yet in that particular company, will you buy that particular stock now? If your answer is no, then you sell. If your answer is yes, then you hold. I hope you got some picture about when to exit, what are factors you have to consider while planning to exit from a stock. So that's all for this episode, and see you in the next episode. Till then, bye from Anup.